Last night, Treasurer Scott Morrison handed down the budget, and so I thought I'd do a video to run through the changes from a financial planning perspective. I said to a lot of people before the budget that the government wouldn't make too many changes around super because being an election year, they wouldn't want to jeopardise votes. But the government has gone in and made some pretty significant changes to the superannuation system that will affect people who are in retirement or people who are planning for retirement. So I thought that we'd focus on that area today. So one of the changes that's significant is that they're going to put a $500,000 cap on the amount of money that you can put into super after tax. So they'll have a look at the money that you've put in from 1 July 2007 through to, well, now really, and if it's more than $500,000, you won't be able to put any more money into super after tax. And that replaces the current rules where someone can put in up to $180,000 per year if they're under the age of 65, and they can use the bring forward rule to put up to $540,000 in over a 3-year period. So that's now been replaced, so $500,000 is the maximum. Another change is they're going to reduce the amount of money that people can put in before tax. So that's where you salary sacrifice and through your employer SG contributions. So the current caps are, for people who are 49 and below, it's $30,000, and for people who are above 49 years of age, it's $35,000. From 1 July 2017, the government are going to reduce that to $25,000 per year for everyone. Another change is that transition to retirement pensions are currently tax-free in terms of the income and the gains that are generated inside of them. However, the government's proposing to change that so that transition to retirement pensions will now attract tax on the income and gains of 15%, or up to 15%, 10% on the capital gains if it's discounted and 15% on the income. Another change is that they want to limit the amount of money that people can have in the retirement or the income stream phase of super. So they're putting a cap of $1.6 million. So if you have more than $1.6 million in a pension account, you'll need to have a look at that and move some of that money out, because the government will penalise you if you have more than $1.6 million. So that's not too bad, because that's per person. So for a couple, in theory, they could have up to $3.2 million in super in the tax-free retirement phase before they pay any tax on that income and gains. Another change which they've proposed is that they're going to increase the contributions tax for high income earners. So currently, if you earn more than $300,000 a year, you'll pay 30% tax on money that goes into super via your employer or if you salary sacrifice. So the government's going to reduce that so that if you earn more than $250,000, you'll now get taxed at 30%. But there was one good change. So what they're going to do is, for people who are between 65 years of age but less than 74 years of age, they're scrapping the work test. So that means that previously you would have to work 40 hours over a consecutive 30-day period to be eligible to put money into super between 65 and 74, whereas now they're going to scrap that work test. So even if you're not working, but above 65 and below 74, you'll be able to put money into super, assuming that you fall under the relevant caps which have been reduced. So overall, the changes are a little bit unwelcome for people planning for retirement, and it means that more people will have to keep money in their personal names and do tax returns every year in retirement. So what that will mean is probably more people will buy property personally, which may push the market even higher. So what I suspect is that next year, definitely the Labor Party, they've flagged this as policy, but even the Coalition, they may make changes to the property taxation rules to limit negative gearing benefits and reduce the benefits on capital gains or concessions that are currently in place. If you'd like to speak about any of the changes further, please let me know. Otherwise, from the team at financialadvisor.com.au, thanks for watching.